Hey, good morning, everyone. This is my morning brief, real quick here on the markets. So today is all about first print of GDP. Okay, guys, most important print of all the GDP numbers. It's out this morning. So, uh, with that being said, we are fighting what we are fighting here with this market. We got a monthly CPR high, which we have rejected for 2 days straight now. Okay, and we have this sort of like a distribution area, bullish bearish distribution area. So on the way down, we found buyers on the way down for the upside, and then on going back up into it, we're finding sellers to the downside until we break out of this distribution zone. Okay, so 2 days back to back here, we're rejecting that area here on SPX. So be mindful of that. You know what we're going on here. I've drawn this little rectangle based on Friday closes. Okay, see how we have all these Friday closes here, and I put this Friday right here as the bottom of the range, and this Friday here at the top of the range for a Friday breakout. So that is really what's going on here. We are fighting this area right here, trying to decide whether or not to break higher, break lower. So basically, we are breaking out of a volatility box right here. Okay, so we know for a fact right here, basically 3811, basically 3811 is the top of our volatility box. Okay, come right up here. Okay, this has been our volatility box for some time now. So if we start breaking down out away from 3811, that opens the door for 3600. Okay, and 3600 is typically is right about the bottom of our volatility box here. Okay, so this is our volatility box, which we are currently trading out of. We do have an inverted hammer from yesterday, very bearish, in face of a horrible 20% down on Facebook after 6% down yesterday. Okay, so really, Facebook's really taking it on the nose here in the early trading here. So, like I said, we are rejecting monthly CPR high for the second day straight as well. So be mindful of that as well. Okay, so that's a couple things I really wanted to float here for you guys, and some things to think about. Now, also, if you look at your ES futures, and let me find the chart here. On the daily. Okay, that's the daily there. So on your ES futures, what we did yesterday here, we have been doing a regression channel since the 10th of the month. Okay, and so we have rejected. We've been rejecting this regression high. Uh, so we went up into it Thursday or Tuesday and Wednesday into the regression high, rejected again into these target areas, upside target areas. So we have rejected the beginning of these target areas now for 3 days straight now. See how we're working out? Boom, boom, boom. And now look what we're doing here. We go down on our 15-minute and we're testing the bull bear cross on our regression channel. Rejected this 3 days now. Okay. 3 trading sessions, and we are potentially turning bearish to start the session here, to possibly coming down really high odds that we're going to be coming down to 38.19, possibly even much worse. So be quite mindful of that here on our ESs. Okay. Other than that, see here, let me think here. What else we got going on here? So all this breakout we've got going on right now here in Europe and here in the States. This is a seasonal, very weak GDP typically number. Okay. So they are thinking that we're going to come in with a light GDP number, and that's going to cause that is going to get everybody on board for a Fed pivot idea, despite the fact that the Fed's already said they aren't going to change policy for multiple months after they see the first signs of weakness in the market. Okay, they've already told us that. They came right out. Powell already told us that. But right now they are trying to, like I said, put in that Fed pivot idea. So be mindful of that. Okay. So we are really at some critical support here to start the session. Other things I'm looking at here. So I also look on the 1 hour typically, and I zoom in here on my Ichimoku here. And I'm not going to make this video too long here. So we are coming into today. This is my momentum cloud. We are below momentum. Okay. And we're right here into our 1 hour 50 SMA. Okay. and right at the top of your standard Ichimoku cloud. So be mindful of where we're at on that. Now, also in that same time, we're going to daily here, and I want to tell you that inverted hammer that I mentioned earlier. What we did here, we came right up to the 50 SMA on the daily, okay, top of our momentum cloud. Then we put an inverted hammer on that. So there is a lot of reason we're into a lot of reason to think we're into a lot of major resistance here. So be very mindful on your trading here. So basically, I would be looking at yesterday's lows to initiate new shorts. So be mindful of that. Okay, so definitely keep these ideas in the back of your head. So right now, like I said, they might be trying to take it higher for a possible bullish break higher. Okay. I have said for some time now that 3,600, anything over 3,600 is overvalued. That's the way I look at it. If you look on a longer term, if you go out on a very long term time frame, let me find a good chart to show you here. I got so much junk on all these charts. And like I was talking about the CPR monthly, I got my that's a central pivot range. Okay, and so this is our monthly right here. So on ESs. So we did actually tag it and reject it yesterday, and now we're drifting back away from that. Very good chance that we've put in a swing high here. Very good chance that we have done it, but there's no guarantee. Okay, so we got the data coming out, so we'll see what happens going into today's session on that. Now, hate to take all those off my chart there. Give me 1 second here real quick. I'll just use this one here, and we'll just use it, put this up on a monthly, 10-year monthly. So bottom line is, guys, this is your long-term trend right here, okay? And if you draw, if you draw this long-term trend out on your ESs, that's putting us into a target of 3,600 for the top of your primary trend, okay? And so basically, if you do a typical correction is 20% below range highs. I think the range high should be 3,600 anyway. And if you did the math on that, that gets you down to 2,900 before a actual recession starts. Okay, in my opinion, for textbook, in my opinion, you figure out the long-term trend, 3,600, and the high of that trend, and then 20% below that. That is where true recession starts. Right now, we're just getting a reset of the earnings multiples as the earnings are coming in, and growth, forward growth is being taken out of the market. Okay, and so be mindful of that. Going forward here, we're not even, we got still a long ways. What is that? 800 for 38. That's 900 points lower on ESs than we currently are. Okay. So be mindful of that in your trading, okay? And so we'll see what happens here going forward. Please like my video if you like it. Retweet me on Gumby9662C, and you can leave comments below if you're got other stuff you want to talk about, stuff that I didn't actually cover today. So I gotta get to work. So I'll see you guys later.